In this video, I'm going to showcase a new indicator on TradingView that can be used to identify trend changes in the market as well as overbought and oversold levels. To add this indicator to your chart, you want to go to TradingView and then open the indicator search tab and then type in Linear Regression Oscillator. And it's going to pick this one by Chart Prime. Now, since this is just an indicator and not a strategy, you can actually use it on any trading security as well as on any time frame. There's not going to be any limitations to that. Now, let's go over what this indicator is. The Linear Regression Oscillator is a custom trading indicator designed to provide insights into potential mean reversion and trend conditions in the market. It's a trading tool that can be used to identify market trend as well as overbought and oversold conditions. Now, this indicator is made up of very few components. As you can see, we have this oscillator that changes color between teal and blue, and it's going to be used to indicate the trend direction and the strength of the trend in the market. This oscillator oscillates between the zero level, which is this line at the center. Whenever the oscillator is above the zero level, that indicates that the market is in a bullish trend. Conversely, as the oscillator shifts and goes under the zero level, that indicates that the market is in a bearish trend. Now, at the top of this indicator, we have the overbought level, colored in teal, and at the bottom of it, we have the oversold level, colored in blue. Whenever the oscillator goes into the upper level, that would indicate that the market may be overbought, and vice versa for when it goes under the bottom level. Now, this indicator also overlays some of its components on the main chart window. As you can see here, we have these up and down arrows. These indicate trend following signals. A teal-colored upward arrow like this indicates the beginning of bullish trends. On the other hand, a blue downward arrow like this indicates the beginning of bearish trends. These arrows are printed as the oscillator changes from blue to teal and vice versa. We also have these mean reversion signals that are going to be printed after the oscillator enters into the overbought or oversold levels. If you wanted to use this indicator to take mean reversion trades, well, these are the signals that you're going to be using. Now, speaking of trading, how can we use this indicator to trade? Well, I'm going to tell you, but before that, let's explore this indicator settings. On the Inputs tab, we have the length. So a default value of 20 is going to be used, and we're going to stick with the same. But just so you know, the length determines the period over which the linear regression is going to be calculated. A longer period is going to smooth out this oscillator, but it may introduce some lag. On the other hand, shorter periods are going to produce more responsive oscillator, but may be accompanied by noisier signals. So to get a balance between these two extremities, we're going to stick with 20. And then here we have the ability to change the upper and lower thresholds. These are going to be your extremities for overbought and oversold levels. For our strategy, we're going to stick with the default values. Now, there is also an option to color your candles for a better visual representation of the trend. We're going to enable that. After that, click OK. Next, we're going to go over how we can use this indicator to trade. But before we do that, let's talk about the Forex broker called Hankotrade. I've been using Hankotrade for quite some time. As you can see here, this is my live account on Hankotrade's all-new trading platform called HankoX. This is actually a new trading platform that they launched recently. It has improved functionality, fast execution, and overall better user interface. The reason why I love Hankotrade so much is because of their low commissions and spreads. For those of us who love high leverage, well, Hankotrade offers a maximum leverage of 1 to 500. If all of this isn't enough, they're also going to give you a 100% deposit bonus for all your first deposits of between $100 all the way to $25,000. So if you deposit, say, $500, they're going to give you a bonus of $500, giving you a total of $1,000 to trade with. To access the bonus as well as all the other perks, sign up to Hankotrade using the link in the video description. Now, back to the video. So one of the methods that we can use this indicator to trade is using it as a mean reversion indicator. What that basically means is we're going to be using it to identify instances in the market where the price may be overbought or oversold. Combine that with some price action concepts and then try to identify trend reversals based on these price overextensions. Now, to show you an example, we can see right here that we had a small bullish trend. the price then went all the way up to the point where the linear regression oscillator indicated an overbought market. It later came back down to the bearish side and then went back above. Looking at the linear regression oscillator, it again indicated an overbought market. Now, if you look at the chart, there is actually a double top structure that was formed. This current high is actually lower than the previous high. So those two are our price action confluences. A lower high was formed, and then we had a double top. Pair that with the fact that the linear regression indicator indicated an overbought market right here, and it increases the probability of the price going down from here. So you enter a short position here, target this swing low for your take profit, and as you can see, that trade had a risk-reward ratio of 2.5 and above, and it was actually a profitable trade. And of course, you would do the opposite of this for a long position. But that's just one of the methods. The second method of trading with this indicator is using it as a trend following strategy. And that is actually going to be the highlight of this video. Let me show you. So to take a long trade, the first condition is you identify a shift in trend from bearish to bullish. That is going to be confirmed when this oscillator changes color from blue to teal. If you don't want to look at the indicator, you can also look at the chart window. This teal upward arrow also indicates the shift in trend. Also, your chart is going to be colored teal. Now, once we have this bullish trend, we want to pay attention to this invalidation level. The price should not come all the way down and touch it. If it gets touched even by a single wick, this trade would become invalid. So we let the market play out and see what happens. So the third condition is we want to wait for the trend to shift to bearish. That is going to be indicated by the price candles changing color to blue. This color change to blue indicates a shift in trend from bearish to bullish. Also, while all this is happening, you want to pay attention to this invalidation level. In fact, I'm going to place a horizontal line right here and track it to the right. We don't want it to be touched by the price. So the next thing that we're looking for is for the trend to shift back to bullish without this line being touched by the price. Let's see if that happens. As you can see, we have our candles colored teal, indicating that we have a bullish trend and the invalidation level wasn't touched by the price. This is what we're looking for. We take a long trade here. The stop loss is going to be placed right at the invalidation level, which is this tiny teal colored dot right here. And then the take profit is going to be set at 1.5 times the risk. Letting the trade run, and it was profitable. So the basic idea behind the working of this strategy is you first of all want a bullish trend to be formed, and then you want to confirm that that bullish trend is actually strong enough to push the price up. Now, to judge how strong a trend is, you want the price to keep going up without coming back down and touching this invalidation level. And as you can see, that is exactly what happened. To test it even further, we need the trend to actually shift to bearish, indicated by this blue color, and then back to bullish. And while all this is happening, no candle should touch the invalidation level. All that is to prove that this trend is strong enough to push the price up. As soon as the trend changes back to bullish, that is a signal for us to take a long position. And of course, for a short position, it's gonna be the opposite. Let me show you. So first, we start with a bearish trend, indicated by the blue candles. You can also see that this oscillator is colored blue, indicating a bearish trend. The second condition is we're going to pay attention to this invalidation level. Let's extend it to the right. We need the price to shift back to bullish, and during that bullish trend, the candle should not touch the invalidation level. And we need that condition to be fulfilled in order to prove that this is a strong enough bearish trend to push the price down. We let the market play out, and as you can see, the candles are now colored teal, indicating that this is a potential bullish trend, but no candle touched the invalidation level. Now, if it maintains going down and the trend shifts back to bearish by producing blue candles, then that is going to be our trigger to take our entry. And this is it. So the first blue candle is right here. As you can see, it has a downward arrow indicating that the trend has now shifted back to bearish. Now, in order to have a level for placing our stop loss, we have to wait one more candle. Now, with this candle, we will be able to see the invalidation level. And for this particular trade, it's actually super dark, but it's somewhere around here. So we take a short position here. The stop loss goes exactly at the invalidation level. The take profit is going to be 1.5 times the risk. Letting the trade run, and it was profitable. Now, this is just an example of how you can use this indicator to trade. That doesn't mean that it's a strategy that you can now go and backtest and use to trade. To make this strategy even better, we could even add an extra indicator called Market Oracle Pro. This one created by Chart Prime. Now, the way this indicator works is it prints normal buy signals and strong buy signals, like this. It also prints normal sell signals and strong sell signals. Now, a way to incorporate this into this indicator would be to look for instances where a strong buy signal from the Market Oracle Pro aligns with the onset of a bullish trend, as indicated by the Linear Regression Oscillator, like this. So right here, if I just hide the Market Oracle Pro, you can see that there is this upward arrow that indicated the onset of this bullish trend. If you pay attention to the same candle, I'm gonna activate the Market Oracle, and as you can see, that same candle also happened to have a strong buy signal from the Market Oracle. Whenever these two indicators are aligned like this, it's almost a guarantee that it's gonna be profitable. You take a trade here, put your stop loss at the invalidation level, and you can even target a 1 to 3 for your risk-reward ratio. And as you can see, that trade was profitable, and the price even continued going higher and higher after that. If you want to get access to the Market Oracle Pro so you can pair it with the Linear Regression Indicator, well, you want to use this link down in the video description, and it's going to take you to this page. It's a private indicator, but if you use the link in the video description, you will be able to try it for free for 7 days with a 7-day money-back guarantee. Plus, you're also going to get a 30% discount, so use the link. Well, that's basically everything for this video. I hope you found some value. If you did, hit the like button below and consider subscribing to stay tuned. Thanks for watching. See you next time.